Hello and welcome back to the stock market analysis, where each and every day I try to look at the stock prices, the stock market, the S&P 500, even commodities and Bitcoin, cryptocurrencies. So if you are a lover of the financial markets, please subscribe to my channel. And today we are going to look at the S&P 500. So without further ado, let's take a look at the daily chart of the S&P 500. From Monday to Friday, I try to cover as many as I can. Okay, this is the daily chart of the S&P 500. And what does this tell you? Now, if there's one thing you learn from this video, is a trend is in motion until it ends. Second thing, if you can remember, is the trend is your friend. Right now, my friends, right? The trend is your friend, and the stock market is in an uptrend. This is the S&P 500 futures, and my belief is that the market will continue to move higher. I have no fears that it's going to crash at this moment for many reasons. First of all, it is in a nice uptrend. It is above the 20 MA, above the 50 MA, and above the 200 MA. And from my experience, if you have a simple trend following tool, simple is best. Okay, you don't want to have complicated things that kind of make you come to different conclusions. So one of the simplest way to follow the trend is to use a moving average. If the 20 MA is rising, the 50 MA is rising, and 200 MA is rising, you want to stay bullish until these MAs flatten and roll over. You can see how it started to have a bullish cross here, started to rise, and look from here, 4548, all the way it rose to 5,250. Now, isn't that a simple trend following tool, but it's yielding a lot of results. And recently it broke out of this consolidation. Okay, so consolidation. Later we're gonna go into 60-minute chart, and maybe it will show you that it's kind of like a small ascending triangle. Okay, now let me just show you some breakout areas. Okay, because it's important. Okay, these are areas of consolidation that it broke out. So first here, recently it broke out. You can see the large green bar. Okay, went up, corrected a bit. Okay, so it broke out of this consolidation, broke out of this sideways trading, broke out of this sideways trading. Now I am drawing these three green things here, or boxes if you will, to show you that these are support areas. And when you see a stock market rising, you want to look at support areas, because if there exist support areas, what does support do? Support keeps the stock from dropping. Support keeps the stock market from dropping. So we have 1 support, 2 support, 3 support. So even if the stock market goes down, okay, it needs to demolish this support before moving lower. It needs to demolish this support before moving lower, and it needs to demolish this support before moving lower. So what does this tell you? The path of least resistance right now is upward. So the probability of the stock market going higher is greater than the probability that the stock market is going to go lower. As long as it stays above this rising 20 MA and rising 50 MA, we want to stay bullish on the stock market, the S&P 500. Okay, now this is the hourly chart, and let me just show you. This is very important for you to look at hourly charts. You know why? Because we want to be multidimensional. We want to have an edge and stay ahead of other traders or technical analysts, because we want to look at many time frames. Here it has broken above a downtrend line. When the S&P 500 breaks above the downtrend line, okay, it is bullish. And here we see the S&P 500 futures breaking out higher of this downtrend line on a very large green candle in the hourly chart. And as long as S&P stays above this downtrend line, right, it is going to be bullish. Whatever it does, straight sideways here, like that, up, down, whatever it does, is as long as it trades above the downtrend line, you want to stay bullish. Now, the other thing you might see is that actually it broke out of a triangle. Okay, don't look from here to here. This is a downtrend line. Okay, maybe I just shorten it for you to see. Okay, this is a triangle. Okay, downtrend line, uptrend line, and right here is the apex. This will be the breakout of the triangle, and the middle of a triangle, for those who may not know, is a support area, which is likely where the 200 MA will go to. So let's say as long as price does not drop below this area, you want to stay bullish on the US stock market. Now let me go to the 2-hour chart so that you can see how we can get the target. Let me just remove all the drawings first. Okay, in fact, let's go to, right, sorry, this is a 2-hour chart. Let me help you get the first target, which is this breakout of a triangle. The top of the height of the triangle will be the first target from the breakout to here. We project the height here from the breakout. So the first target is around 5273. Okay, 5273. All right, remember that, 5273. And then to get a bigger target, we want to take the this is the daily chart. We want to take the swing lows here. All right, swing low here to the highs here, and project and make a measured move from this swing low here. You can see this kind of doji, which shows indecision among bulls or bear, but it was demolished by bulls, hence it moved higher. So we project it, the move here to here, the measured move we project from the swing low here up to here to get a target of 5360. Okay, 5360. All right, so we have a shorter target, longer term target. Okay, not so long, it's actually short term. Okay, within maybe 2 weeks it might reach. That is the target. Okay, 5360, I would say, around there. Now, target is a target provided that the S&P 500 does not break below the low of this doji, the recent swing low. Let me just go to the 2-hour chart. Provided the S&P 500 does not break below here, then we have our first target and second target. Okay, remember also that the apex of the triangle is also a support area. Okay, you can read it up on triangles and support areas, okay, if you have time, but I'm just telling you this is a shortcut. I'm telling you from my analysis experience that if S&P 500 is able to stay above here, then yeah, most likely the first target and second target will be met. But even if it drops in, as long as it stays above this area, right, you want to stay bullish, and there's high likelihood that you will meet this target. So let me just show you a monthly chart. Wow, amazing, amazing, amazing. Okay, you could almost say that the S&P 500 is making a cup and handle in the monthly chart. Okay, let me just draw for you to see. Alright, this is the cup and this is the handle. Alright, can you see the cup and handle? Alright, cup and handle. And you can get a target, a really long-term target, by taking the height of the cup and projecting it upwards from the breakout. Okay, breakout area Right, let me just get this right. Breakout area. Let me just unlock the price scale. Alright, to get a really long-term target of 5690. Okay, around that, not too far away from 5660 that we got just now. So, just unlock it. Alright, I hope you have found this analysis of the S&P 500 beneficial to you. It's a way that analysts use to make a projection, a price target. I just use it from a technical analyst point of view to look at chart patterns, the trend. How far the market can go, nobody really knows, but we can, if we get very near to what our target is, then we consider our analysis quite good. Okay, and always remember that the trend is your friend. Nobody can predict, but we can always follow the trend. Okay, and if you find this analysis helpful, you have learned something, to give my video a like and subscribe to my channel for more analysis like this, and I'll see you in the next one.